I don't own precious metals for 10% moves or 20% moves. I own gold because I watched in the year 2000 it go from $252 to $1,900 over 10 years. In other words, I don't own it for a 20% move.
Right,
I own it
right.
for a 5 or 6 fold move. I own silver because I watched it go from $4 to $50, a 12-fold move. I'm not saying it's going to happen. I'm not saying it's going to happen quickly, but I actually could not care less if silver was $30 or $32 or $33 or $27. I own it because after the primary trend is established by gold, silver traditionally has moved further and faster.
UBS strategists have lifted their silver price forecasts, expecting the white metal to outperform gold soon. Now the Swiss investment bank projects a 2024 year-end price target of $36 for silver and an average of $30.5, up 20% and 14%, respectively, compared to its previous forecasts. Strategists noted, "Our new silver price expectations reflect outperformance relative to gold and show the gold-silver ratio falling towards the long-term average, which is currently 68. RickRule is the proprietor at Rule Investment Media and is renowned for his insightful perspectives on investing and economic trends. In RickRule's perspective, owning precious metals isn't about chasing minor 10% or 20% moves. Instead, he reflects on how gold and silver soared over a decade. The precious metals sector is undergoing an extended period of consolidation, and following the strong run-up earlier this year, this phase gives traders and investors time to catch their breath while adapting to new and higher levels. From a technical perspective, RickRule states that silver often outpaces gold once its trend is set, and claims that greed drives his primary motivation for owning silver and silver stocks. Bank of America metal strategist Michael Widmer predicts silver prices to average $35 per ounce by 2026, buoyed by bullish factors, including the momentum in the gold market. He recommends Pan American Silver Corp and Wheaton Precious Metals Corporate as strong investment choices for those seeking significant exposure to silver through mining equities. By examining past markets, Rick predicts that a bull market in natural resources and precious metals could lead to 200% to 300% gains in top-tier companies and dividends while waiting for market shifts. Now we present the clips of RickRule's insights from his recent interview with Wall Street Silver. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
I couldn't care less about those psychological breaks.
Right.
I don't own precious metals for 10% moves or 20% moves. I own gold because I watched in the year 2000 it go from $252 to $1,900 over 10 years. In other words, I don't own it for a 20% move.
Right,
I own it
right.
for a 5 or 6 fold move. I own silver because I watched it go from $4 to $50, a 12-fold move. I'm not saying it's going to happen. I'm not saying it's going to happen quickly, but I actually could not care less if silver was $30 or $32 or $33 or $27. I own it because after the primary trend is established by gold, silver traditionally has moved further and faster. I
Right.
will admit to you, Ivan, I own more gold than I own silver because my primary investment motivation around precious metals is fear. But I do own silver because silver is more volatile to the upside. I can afford a bit of risk. If I'm wrong, it doesn't change my decision as to what to have for breakfast.
Absolutely.
Uh, and as I've told you before on your show, in the 1970s, I watched Coeur d'Alene Mines go from 10 cents to $65.
That is
That was a
insane.
fairly instructive lesson. I didn't
Wow.
participate because I was too young, too dumb, and too poor. However, not too long after that, end of the 1980s, I financed Pan American Silver at 50 cents, watched it go to $45
Oh,
in
wow.
6 years.
Oh,
I
that's
watched Silver Standard go from 72 cents to over $40 in 6 years.
wow.
I own silver, and more particularly silver stocks, out of pure greed. I'm not suggesting I'm going to be right. If I am right, I'm not suggesting it's going to happen soon. I have about 2.5% of my portfolio in silver and silver stocks,
Mhm.
and I own it because I think they might end up being 25% of my portfolio with no additional capital addition. Well, I would urge the new investor, first of all, to invest before he or she speculates.
Right.
Many people come into our sector because they hear about the odd penny stock that went up 20-fold, not understanding that most penny stocks are valueless, have no value whatsoever.
Mhm.
The probability of making a bunch of money in penny stocks, if you don't work hard and have some experience, is low. What you do when you look at past markets more thoroughly is you learn that the market beta, which is to say the measure by which mining stocks outperform the broad market during mining bull markets, is sufficient enough to handle most people's most advanced levels of greed. I guess what I'm saying by that is that you start your portfolios as a beginning investor with the best of the best. You buy the Franco Nevadas, you buy the Wheaton Precious Metals, you buy the Agnico Eagles, you buy the BHP, you buy the Glencore, you buy the Rio. If we are headed, as I believe we are, into a natural resources and precious metals bull market, you will likely be able to enjoy 200 or 300% gains with the best of the best, and you'll likely be able to pocket dividends while you wait
Wow.
in case the market changes later than you would like. If then you are willing to work hard, if you are willing to spend at least an hour a month for every stock in your portfolio, reading quarterly reports, reading annual reports, reading management information circulars,
Mhm.
proxies, then by all means, if you're willing to do the work, come down into the juniors. But until you have the necessary time and expertise to operate in that space, be very careful.
RickRule warns of potential future bank failures, particularly related to undisclosed risks in commercial real estate and asset classification practices. He anticipates challenges emerging in 2025 or 2026, affecting both smaller and potentially larger banks. Banks are still likely to face more fallout from problems with commercial real estate loans, but Federal Reserve rate cuts and increased lending appetite from outside the banking sector could provide a healing tonic, according to Moody. The Fed's results, released on Wednesday, examine whether banks could continue lending to households and businesses during a severe global recession. They also indicate the amount of capital banks need to be considered healthy and how much they can return to shareholders through dividends and buybacks. In contemplating the future, Rick asserts that despite potential efforts by BRICS nations to establish an international settlement system, he firmly believes the US dollar will continue its role as the dominant global reserve currency, albeit with diminishing influence over time. Let's get back to the interview.
The BRICS won't even rival the US dollar in BRICS countries. The underlying currencies of the countries behind the BRICS are generally opaque and unconvertible. Mutual friend Doug Casey said the US dollar is a I owe you nothing. The euro is a who owes you nothing. And given the economic status of many of the BRICS nations are nobody owes you anything. A settlement mechanism, perhaps. But my suspicion is that the world's reserve currency will be the US dollar for the balance of my life. For the record, I'm a 71-year-old, very healthy guy. But the US dollar will be less dominant. Dominant, but less dominant. So I think that the BRICS nations really will do is attempt to set up some sort of international settlement system that will be very short-term and oriented. I do have a bank and organization myself,
That's
and
right.
I can tell you that the FDIC is very busy. It seems that their existing files cause them enough problems that they are not being as quick as I would prefer with their new files. I do not think that 2024 will see another rash of bank failures, but I wouldn't be surprised to see 2025 and 2026
Mm.
generate that raft of failures. Right now, the accounting rules promulgated by various federal agencies allow the banks to classify long-term assets held to maturity, which doesn't require them to mark to market. Many of the bank's assets have duration risk, which is to say that they were loans that were written when interest rates were lower. With interest rates higher now, the net present value of those loans are lower, but they're funding those loans with deposit products where their interest is higher. There
Right.
are a lot of banks that would be insolvent were they required to mark their assets to market. They aren't required to do that until the asset comes due. And I have a fear that, particularly with regards to the commercial real estate market, that there's a fair bit of unspoken sin on the balance sheets of some banks, to the extent that those unspoken sins need to become spoken sins in 2025 or 2026. I think then you begin to see some difficulty, and I don't think that that
Right.
difficulty will be confined to smaller banks.
The latest reports from the Silver Institute, headquartered in Washington, D.C. in the United States, emphasize that 2024 could be a fantastic year for silver, with prices likely reaching their highest levels in 10 years. As we navigate these dynamics, what strategies are you considering to capitalize on the evolving precious metals market? And how are you preparing for potential shifts in the banking sector? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.